Do you want to know exactly where to buy, sell, and hold stocks? Do you find yourself buying a stock at the exact wrong moment, or maybe selling a stock at the bottom, or maybe holding a stock a little bit too long? The act of investing is overcomplicated with all of these choices, and most importantly, losing you money because of it. So in this video, I want to teach you tips and tricks to save you thousands of dollars as I tell you when to buy and sell and hold stocks exactly. Hey, I'm Giannino. I teach you how to make money, grow money, and invest money. So please like this video and subscribe to the channel. I'd greatly appreciate it. In the stock market, it is designed to rob you daily. Hyped up stocks with no real value are just meant to lure investors in and get them buying at the exact wrong times. And stocks that are falling are always consistently partnered with bad news and bad articles, all trying to get you to sell at the exact bottom, which I know you most likely will do. And then you see the stock double or triple in the next couple weeks, wishing that you held that stock. The stock market's in a consistent cycle of trying to get investors to buy stocks that are flying at unreal speeds, or to get investors to sell stocks that are dropping faster than you can blink. This is all playing on your emotions and trying to get you to lose money in the stock market. But this stops today as I teach you how to rationalize how to buy and sell stocks without fear and emotions driving your decisions. Using this knowledge can save you so much money per year as I teach you the ways that we can stop transferring wealth from the poor to the rich and reverse that trend. That's what we're going to do today, is to teach you 5 ways to buy, sell, and hold stocks, as well as trying to reverse that trend and transfer money from the rich back to the poor. I just want to make it known I'm not a financial advisor. This isn't financial advice, but here we go with the 5 tips to buy a stock properly. The first tip to buy a stock is find one with a great moat. And all a moat is a product or service that people are going to need for the next 10 to 50 years. A strong moat keeps revenue consistently coming in and competitors out. If you can find companies with strong moats, they are most likely great investments. The second tip to buying a stock is get it at a discount. So try to find this stock you like at a 10 to 50% discount. Trust me, if you like the stock now, you will like it much more if it is down at 50%, where you can own twice as much of it. Warren Buffett calls this the factor of safety. So when you're investing and you analyze a company, there's a chance you're buying it still at the wrong moment, maybe 20 or 30% wrong. The only way to avoid this mistake of not analyzing a company correctly and buying it when it's overvalued is just buy it when it gets cheaper, because it most likely will get cheaper in the next couple months. The third tip to buying a stock is to scale in. So whatever amount of money you want to buy that stock with, it's much better to buy it slowly over time. This will help you capitalize on any cheaper prices that can occur in the future, because like I said, it's most likely going to drop from where it is now. So you might as well have a little cash on hand to buy it if it does drop. The fact is that the stock market is completely unpredictable. That's why it's good to buy a little bit now, because you don't know if it's going to go up or down. So if it does go down, you can buy a little bit more, or if it goes up, you can just hold what you have. It's really the best of both worlds, having cash ready to invest and buying what you like right now. Most investors call this scaling in. The fourth tip to buying a stock is forget the news, because the news is driving you to buy things that are overvalued or trying to follow hype trains, and this is exactly what you should not be doing. If you are following the news and following the hype, you are most likely going to have terrible returns as an investor. The only way to stop listening to the news and having it control your emotions is to have a plan and stick to that plan. Pretty easy. So the fifth tip to buying a stock is to follow growth. We want to look to invest in companies that are growing consistently over time, because that proves they have a strong moat, strong customers, and their revenues increasing, their dividends increasing, maybe their cash on hand or their gross margins. We want to see any or maybe all of those metrics increasing over time. That shows it's a great investment, and that shows you should be buying it. So those are the 5 tips to buying. You're going to be more excited about these 5 tips on when to sell a stock, because that can be scary, is when your investment's down and you don't know what to do. And tip number 1, sell at your target. And I tell this to people all the time. You have a plan before you buy a company. You should be selling when you said said you were going to sell. For example, if you bought an early company like an IPO and you don't want to hold it long term, but you just want to hold it for a couple years, hold it for a couple years. If at that point it doesn't do what you want it to do or doesn't grow as a company, get out of it. Don't hold it for the long term just because it didn't hit your perfect profit zone. Another example is if you bought a company at $50 or $70 and you said you would sell it at $100, make sure you sell it at $100, because if you try to get greedy there, that's where you're going to make a huge mistake where you could see it drop back to where you bought it, giving up precious profit. The second best place to sell a stock is when you see warning signs, and these could be in the whole realm of what we talked about earlier for revenue, gross profit, dividends, as well as cash on hand. If any of those 4 factors are decreasing or the company just looks weak, their moat is bad, their products aren't being bought, there's a lot of reasons to show you why you should not be in that investment. Again, it's most likely going to be related to those 4 factors I just mentioned. If any of those weaken, you should probably be getting out. But I just want to make it clear these factors should be weakening for months or years. If you just see revenue drop for 1 quarter, don't worry about the company right now, but make sure it doesn't continue for the next couple quarters. And the third best way to sell a stock is the tax benefits you could gain from selling. So when a stock is down, you can actually lower your taxable income by a maximum of $3,000. So if you lost $3,000 in a stock, if you sell it and lock it in, you can write off $3,000 in losses on your taxes, which could save you $1,000 in the next tax year. The cool trick though is if you wait 30 days after selling it, you can buy back that stock and hold it for the long term. So you can capitalize on your loss as well as still hold the stock, only if you wait 30 days. The fourth tip to sell a stock is to take profits. Some stocks can be overvalued at any moment in time. So if your stock is up 100% or 200%, don't sell it all, because maybe that stock is great long term, but it's still good to lock in some profit, because when a stock is up 100%, you can sell half and you still have your initial investment still in that stock. So it's good to always be taking profit in the stock market. And the fifth best time to sell a stock is if you need the money. And I'm talking about if you need the money even next year. If you know if something's gonna pop up where you need that extra 10K, 20K to buy a house or buy a car, you should take that money out today, because you are not guaranteed that money to be at the same value it is right now. It could drop 50% next year or even more if we have a recession. So it's important, if you need the money immediately or even in the near future, to sell those stocks. Now let's get into the most important part. These are the 5 tips to hold a stock properly. And again, this is where you make the most money, because Warren Buffett once said, the best holding period is forever. So if you understand how to hold a stock well, you can make so much money. So the first tip to hold a stock relates to the fundamental factors I talked about: revenue, gross margins, dividend, cash on hand. There's plenty more, but when we see growing numbers in revenue or gross profits year after year after year, that validates we have a good investment. So just like that was a reason to invest in the company, it's also a reason to hold the company long term, which is pretty exciting. So we want to see growth. That's a great thing for a company. The second reason to hold a stock is the tax benefits from it. So if you hold a stock for more than 1 year, you have to pay long-term capital gains when you sell it, which is much less than short-term capital gains. It could be 50% less in taxes. So if you made $100,000 in short-term capital gains, you would pay at least $35,000 the next year, maybe more. But if you made $100,000 over a 1 year period, even longer, you'd have to pay $15,000, saving you an extra $20,000 just from a holding standpoint. So holding stocks can provide a tremendous benefit from a tax standpoint, as well as just not selling the stock. You don't have to pay any taxes. So if you just continually hold the stock, you'll just never pay taxes on it. Once you sell, that's when you have to pay taxes. So obviously the longer you hold, the less money you pay. And the third best reason to hold a stock is compound interest. This is where you earn money in 1 year and then that money earns you money, and then that money earns you money, and over time, that's how money compounds, and that's how it grows much quickly. So the longer you hold, the faster your money grows, because the stock market makes 7% per year, which could double your investment in 7 years. And the only way it can double it in 7 years is from this compound interest idea. But the basis is the longer you hold in the stock market, the more magic it does for you. And the fourth reason to hold a stock is to collect dividends, because some stocks pay you every single year. So the longer you hold them, the more paychecks you're going to get from that company. So why not hold for as long as possible, especially when you're getting paid each year to do it? And the fifth reason to hold a stock is to be a part of something, because when you hold a company, you feel a connection towards that brand. You believe in their products. You like seeing people use their products because you're an investor and you buy the products because you feel pride. So it's pretty cool to be an investor in a company you believe in. Not to mention, you do get votes for that company in certain cases, which means you could be involved in the long-term direction and how the company moves from year to year. But if I had to break down this advice as quickly as possible, we are looking to buy great companies that are growing over long periods of time, and we're looking to buy them slowly over time. We're also looking to sell those companies that we bought when their company starts deteriorating from a fundamental standpoint. You can also sell when you need the money, or from a tax standpoint, saving in taxes. Some of the best reasons to hold a company are the dividend payouts, the tax benefits, as well as the compound interest. There's many more reasons to hold a company. That's why Warren Buffett's favorite holding period is forever. Everyone investing makes this mistake. How much do you need to get started? Check out the video to the right of me as I answer this question. You're gonna love it. I figured out the perfect amount of money you need to start investing. If you invest less than this amount, you will regret it. If you invest more than this amount, you will put yourself at risk for financial ruin.